Welcome back to our new series on valuation. Today in part 15, we will be talking about Precedent Transaction Analysis, which is the most important tool for valuation. Precedent Transaction Analysis helps us to calculate the present value of an asset, including the information based on previous transactions. Precedent Transaction Analysis helps in establishing the premiums and multiple required in a certain industries. Promoters can also gain knowledge about how investors arrived at a trustworthy market assessment. One of the main problems with precedent transaction analysis is that the investor cannot duplicate the historical market assessment, as a result of which the valuation based on prior transactions is not always as accurate because the market environment may change radically since then. Hence, the information obtained from such an analysis is only valuable when the investor using it as a benchmark valuation rather than using it as an actual depiction of a company's share. After such an evaluation, the investor needs to conduct more difficult research in order to determine the market value of a share in the event of purchase. To achieve a successful precedent analysis, it is important to pick the ideal business and the transaction to examine. You can keep the following things in mind. Number 1. The company you are comparing with should be from the same industry and should have a comparable financial understandings. For example, if I am comparing an FMCG sector with the hospitality sector, it would not be advantageous at all. Now, the comparison size of the targeted company and the comparison company should also be comparable. For example, if I am taking a company with 100 crore and comparing it with a 20 crore company, should not be advantageous at all. For example, to understand prior transaction analysis example, have a look at the following three businesses A, B and C. Let's say company A and company C have comparable sizes, they have similar financial situation and other characteristics. Now, if company B buy company A at a value of 1.2 billion, one can confidently predict that company C's value would also be 1.2 billion based on prior transaction that happened between company B and company A. Let's talk about some of the advantages of precedent transaction analysis. Number 1. The analysis is based on the information that is readily available to the public. Number 2. Possible to use multiple of one company to drive the valuation of other company. Instances of direct comparables are rare. And the last one is it provides better insight into the bidding trends. Transaction analysis is combined with other types of analysis in order to produce a desired outcome. This method of valuation provides a broad understanding about a stock price and the stock of a company. However, the investor should not primarily depend upon this information. Before making any choice, the investor should know what about the state of market. For instance, the company's stock price may be significantly impacted if the number of competitors varies. Investors are compelled by these and other factors to look into alternate approaches to through this analysis beside this one. If you have any questions or feedback on our videos, please leave them in the comments below and don't forget to like, share and subscribe to our channel for more such videos. Till then, stay tuned for our next video on the valuation series. Thank you for your time.